Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, August 5th. I'll remind people, run the video at 1.25x for your maximum efficiency. Taking a quick look at futures, equities are up about 0.3 across the board. Oil's up about 0.75%. On the macro front, we've got jobless claims at 8:30. And we've got natural gas inventories at 10:30. And I want to remind you, tomorrow morning before the bell, we're going to have the July big jobs number. And that has the potential for moving markets. If you'll remember, I think we missed last month. Not by a lot, but we did miss. So if you've got exposure, or say stuff expiring tomorrow, you may want to, depending on your position and what you got going on, you may want to close that out at the close of business today if you don't want to take that jobless claims risk, because of course on something that's expiring tomorrow, any kind of a hit would hurt quite a bit. So like I said, I have no idea what you may have going on. Just as a reminder that jobless number could possibly move the market. On the earnings front today, we got Moderna, Wayfair, Yeti, and Regeneron before the bell. Just a few names: Beyond Meat, Cloudflare, and Zillow after the bell. Of course, there's a lot more, and there's a graphic on the blog site that you can check out if you want a more complete list of names. And I've always found that Earnings Whispers does a pretty good job of aggregating all the different earnings if there's a particular one that you're looking for or want a more complete list. The graphic just has the big headline names. But I wanted to illustrate just this incredible bond volatility and bond rate volatility that we've had. Yesterday we had a big ADP miss coming in at only around 300K, and these are just approximate, but I mean, it was half of what they were looking for. And so rates took a plunge, right? Then they bottomed out, and then an hour later, we had the highest ISM services print ever recorded. And then rates ripped before, pulling back a little bit later in the day, a big momentum overshoot and then pullback. So, I mean, and this was where we saw, I sent out a pre-market note, that gold was ripping. It was up $25 or something like that, getting close to our breakout levels in the miners and GLD, and then they faded. On this rip, they faded gold the whole rest of the day, and I think they even took it red at a certain point. So I am so thankful that I didn't chase that. Like, okay, this is it. There's just been so many head fakes with these rates, and we've been showing this every day. Just because it seems like the market has been hostage to these bond rates. Like the 10-year yield is like the sun, and everything else is like orbiting around it. And depending on what's going on, you'll get a reaction in in the cyclicals like we've been talking about, or they fall and we get a move in technology and bubble stocks. So it's really been a tough environment to really get a read on if a sector rotation is happening or if it isn't. And we've had several, like I said, it's been head fake city. As soon as you think something's happening, they take it back the other way in the next day or two. And, I got caught up on that a little bit in Vale, iron ore producer, and Freeport-McMoRan, FCX, and copper. I still have those, but I'm underwater. I have a little bit of time, but not a lot, so I want to see that reverse. Here's TLT, and we've been in this falling rate environment, and we had a breakout here above 150. So now that, I mean, you're up a buck. Not anything to get rich on, but it is, that has been a trade that's working. And so I'm going to be keying off this chart for a TLT sell signal, which would favor cyclicals in banks, etc. US dollar saw some strength yesterday. Again, trying to key off these two primary scenarios that tie into the dollar. So normally, I or we probably wouldn't be that fixated on the dollar, just kind of have, the trend in mind. I mean, back here it was easier, downtrend and then uptrend, but now it's getting choppy. So paying inordinate attention to the dollar. And just as a reminder, if you're new here, first of all, thanks for viewing. I really appreciate it. But here's how to register for all my content. It takes 5 seconds if you just jump over to the blog site at tradersprofitcompass.com, drop in your email, look for the confirmation email, and then once you're registered, you'll not only get all my content delivered to you morning, noon, and night, but also an invite to our trading room. Got a lot of new traders, new to the group, and offering a lot of value-added ideas. So it's great to have them. I'm not even going to get into Robinhood. Going from 30 to 85 yesterday. I mean, it's firmly in the grip of Wall Street bets. They just added options yesterday, and of course, everybody's buying the farthest out option available that probably expires tomorrow or next Friday. But it's crazy land. I can't do that. That's just me. It doesn't fit my trading style. I don't want to. That's just not my thing. If it's your thing and you got in on that, great. Just be careful and prudent. And speaking of crazy, we've been involved in this AMD, and our whole key was, some of us got involved back in here, and then we were saying, watch out for a break above 100 because fireworks could happen. And it did it has happened. And I mean, this is beyond anything that I thought was in the realm of possibility. And we've blown past the, briefly blown past this 1.618 fib extension to 121. But I mean, this is a parabolic move, and parabolic moves never end well. So my point in showing you this is, and I want to just jump over to the, overshot, the 1 hour chart here. You want to stay really objective here. And when I say, parabolic rises don't end well, that's in general, that's true. But how do you know when to pull the ripcord? And I think what you need to do is stay very objective. And as long as it's in the channel, truly bad things can't happen. I mean, you would expect a visit to the bottom of the channel and potentially a bounce. You would certainly expect a move to the midpoint of the channel where it could find support. You could certainly see a move back down to 117 right here where there's volume over price support. So I'm still in it, but I've scaled back my position to something that I'm comfortable with. So what I'm going to do is, if we break the channel, and that I mean, it could be today, it could be tomorrow, whenever. It doesn't really matter. The channel lines will be moving the whole time. So as we move up, of course, the channel moves up as well. But if we break the channel, I'm out. That's what I'm going to do. And the reason I mentioned my position size is because we're all products of things that have happened to us in the past. And I don't want to spend a lot of time on it, but there may be people out here that have been rolling up your position, but then buying more options and more options and, pyramiding the wrong way. Instead of buying all your options at the low and scaling out, I'm sure there are people that are listening right now that did the opposite. They bought a few and they worked and then rolled all that money and bought more and then bought more and then bought more. There was a time in my life where I did that, and then I woke up one day to a massive gap down and essentially got wiped out. I'm going to do a video about that story because I'm tired of retelling it, tired of reliving it. It's when you're walking along in Afghanistan and you step on an IED, right? And you get your legs blown off. You're not sure if you're alive, but you've been really wounded. And I don't want that to happen to you because it's painful, not only in the P&L, but psychological. That's why when I start seeing embedded gains in our option positions, I always send that note out. Make sure getting paid is part of your process, because as long as it's on paper, you don't have the money. So you're looking at this thing saying, oh my God, I just made 10 or 20 or 50 or whatever, how many thousands of dollars. And then one day, it gaps down $10, you're wiped out. So maintain a reasonable position size and just say to yourself, am I okay if this goes to 0 one morning? And if you're okay with that, then you should be fine. But let's watch this real carefully. It is super extended. I saw it was down a little bit this morning in the pre-market, but not dramatically so. So just keep an eye on that. Now quickly, I said that the market seems at stall speed. We get right up here. We have broken out. We're holding that breakout on the equal weight SPY above 152. It's not really going, hasn't gone anywhere in a week. And we can see that on the SPY 2 hour. We've been thrashing around in here between 441 and 436. And so today, I think you can just use the midpoint of the channel around this 438.5, 438 level as a bull bear kind of pivot. And when I say bear, it's all relative. It doesn't mean the market's bearish. But if you're actively trading and you lose the midpoint of the channel, then you got to start thinking, are we going to make a run back down to this 436 level? And this is the perfect chart to illustrate what's been happening is, visits to the top and bottom of this range. And so today, if you lose 439, you got to think 438 and possibly down to 436. As long as you hold this midpoint, we could very easily go back up to the top of the box, 440, 150, 442 in that area, and hopefully break out. Because with a $5 range, you're either looking at 446 or you're looking at 431, and that's a hell of a difference, on a breakout or a breakdown. Right now, we're not facing that. We're just facing chop within the channel. But we've obviously been at stall speed here since July 23rd or whatever. So we're a couple of trading weeks into that process right now. So we just have to see which way this is going to break and use our are active trading level to level in the interim. And if you're on the daily time frame, you're just waiting for a breakout or a breakdown. And I think the default position here is to be long. I don't see anything, although it's frustrating and you kind of feel like, oh, they could pull the rug at any time. That's true. But they can pull the rug. They don't need a reason. So feeling a little bit frustrated shouldn't bleed into feeling bearish, because we don't really have, in my opinion, a lot of bearish signals. You can see here on the 2-hour where we've been grinding higher. We haven't made any subsequent progress from back here, but we've clawed it back to the point where we're close. So today, I think 367 is your active pivot. And as long as we're above this rising trend on the 2-hour, I think we're fine. On the 30-minute chart, I've basically just moved the line over here. You can still see that 367 is the pivot. And if we get a breakout above 368.50, then, we should be able to have some running room higher. But a break below 367, you'd come right back down to 365.5 in a heartbeat, in my opinion. IWM, very choppy. I mean, not that money can't be made if you're actively trading this stuff, but you can see there's a wall here at 224, and there's should be pretty good support where it is right now. I saw that price was up about 75 cents pre-market, but in all honesty, that's nothing. We had this uptrend line, we got the break, and then we got a back test of that break from below. And that's always a, for you budding technicians out there, when you break a trend line, it's not uncommon for price to come back test that trend line from below, and then fail, a resumption of this down move. So we're going to have to see here at 218 whether price can hold the line. And if it can, we could grind our way back higher. But if we can't, if this 218 fails, then we could easily get a roll down to, 216, 213, that kind of a thing here. So be aware of that. But there's definitely some money to be made in IWM if you are sharp, on the ball, and have your levels lined out. I mean, this was a move from 224 to 218. Let's see, was that? Yeah, in one session. So I mean, that's $6. I mean, you'd be thrilled at any day trade that made that kind of money. And even if you got 4 out of the 6, that's still a very nice day. So you can see right here, 218 is your pivot. Before we get into the details on FATMAAN, like I said, if you're new here, welcome to the channel. Hit the subscribe button and the alarm bell. Then you'll get all my video content when I produce it, and drop your name in the registration bar on the homepage at tradersprofitcompass.com, and then you'll get all my content. And longtime viewers, thanks for the support, and thanks for helping me build the channel by passing the link along to your friends and family and other traders in your social circles. Facebook had a really nice day yesterday. We talked about getting a break above 352, and if you've been with me a while, you know how these boxes work and these gap ranges. You break into the gap, you fill the gap. You break below, if you recapture that level, it's bullish, and then your target is the top of the box, and that's what we got yesterday. So we got a move, and we actually got a breakout above this 358, and as of the close yesterday, we held that breakout. So now the next technical target is 362. And so today, if you're actively trading, if you're not in it, you can be long against 358, looking for 362. And then if you get a break above 362, I would definitely be ratcheting up stops and strikes to that level, because then you're going to want to put some duration on the trade, go a little bit farther out in time, and see if you can get this $10 or $11 gap fill up to 373-ish, over time. That's not going to happen in a day unless something, dramatic happens. But once you break back into this gap, that's your natural target, and you'll find some resistance here at 368. So that was a really nice move. Apple stalled out yesterday. It really didn't do anything. Hasn't done anything wrong. You could see where I could easily put in a little trend line here. Move up, sideways consolidation, impulsive move higher, little consolidation, and now see if it can pop above 148 to really get things going. But you can be long against 147. I'm holding a long position, basically flat on it. I need a breakout above 148 for it to pay. So that's what I'm looking for. If there's any material move down below where it's at now, not going to have a whole lot of choice of getting out, because then there's the possibility, once this trend line breaks, that it will roll down to 145, and obviously that would be a bearish development. Not hugely bearish, but bearish enough. Tesla, big impulsive move off the bottom, has took a peek inside the gap earlier this week, pulled back, and then yesterday made a move inside the gap, but then they faded it. They faded it back again. So I think here, although it's tempting to think it's going to go in and fill the gap, I would wait. I would wait until it gets above 720, and then shoot for a gap fill. But I wouldn't. I mean, it's proven a couple times that it hasn't been able to do it. Here was the first time. Here was the second time. Actually, it made a little run here where it failed. So I'd want to see that 720. Make price prove it, in other words. Make price prove that it can take out 720 and hold it. And then you can shoot for 735 or even higher if it gets its legs under itself and maybe gets a lift with the market as well. Microsoft, nothing. I've redrawn this whole scenario a little bit for you. I've boxed in this range where you can see that this 285 has been solid support, and it turns out this 287.50 has been a problem. Going back here, reject, bunch of rejections. It tried to make a run yesterday, came to the bottom of the box, and then moved back up to the top of the box, but then got rejected at the end of the day. So I'm looking for a breakout above 287.50, and then hopefully get a move up towards 290, where you see was the prior high. So I think these boxes, these ranges, really help to visualize what's happening with price. And so within the box, you're going to see that volatility, up and down until we find out if it's going to resolve either higher or lower. Amazon had the big move the other day. Yesterday was a nothing day. So it just has spent some time consolidating under the gap, this 33.75. If you're any kind of a Amazon trader, or even on the daily time frame, if you get a break above 33.75 that holds, the opportunity is to go from 33.75 to 3,600 on a gap fill, and that's a very high risk reward trade that you can put your stop down here a little bit below whatever your risk tolerance is, and see if you can get a move back up to the top of the box. Now, I don't think it's going to do that on its own. It's going to need help from the market. It's going to need help from NASDAQ, but it is what it is. We've seen stranger things happen than, a gap fill. Google, same thing, just consolidation. I think you alarm 710, and on a breakout, you shoot for 710, I'm sorry, alarm 2710, and then you can shoot for 2760 at the top of the box. And just remember, you've got a downside gap that has not been filled yet. So you break down below 2680, then it would be tactical short time down to 2640 if you want to try to do that on an active trader basis. But very strong stock. For you guys that are on the daily time frame, just stay long. There's no reason. I can actually show you the daily chart here. I mean, we're well within the channel, no sell signals whatsoever on the longer time frame, so I wouldn't even be worried about that at this point. Netflix, double bottom here. This is actually an interesting setup, and I didn't notice this when I was doing my prep work. Double bottom, bottom here. Notice where PPO is. Low, right? Come up, come to the same point in price, right? Double bottom low, but look where PPO is. That's your bullish divergence. And in my experience, that's a money setup. Of course, I wasn't paying attention to it, but if you were, or even at now, this is a bullish setup. We've tested the lows. We got the initial move higher, but at much higher momentum. And you can see a little bit, not a lot, of bullish divergence here on RSI. It's much more dramatic here on momentum, but momentum's where it's at, right? So I think the door is open for a move up to 522. And then the way it works, to find the measured move target of a double bottom, you go like this. You go from the double bottom low to the peak of the W. Here's your W. So you go to the peak. So let's call that 508 to 522. So what is that? $14? So $14 added on to 522 is 536. So that would be your measured move target on a break above 522.50. Now, if it were me and I was a guy that was interested in Netflix, don't wait. If you say to yourself, this is going to break out, you can take it now at 517.50 and set your stop just below 515 and see if you don't get that move up to 522. And then if the stars align and you get that breakout, you're already long. You're sitting in a winner and you're hoping for a breakout. A more conservative trader would say, make price prove it to me, and just set your alarm at 522.50. And then once you get that confirmation of that double bottom breakout, then you can get long and look for 532 and 536, the measured move target. So this is a nice study in a double bottom. Let's watch it going forward to see if it plays out on a technical kind of basis. Semiconductors continue to work, and I have no idea what percentage AMD is a part of this whole thing, but it's not. I don't know if it's in market cap. I think it's like, don't quote me on this, but I think it's like 6 or 7. It's not a giant company from a market cap weighted basis. I mean, I'm sure NVIDIA plays a much more significant role in what's happening in SMH than AMD. It's obviously helping, but I don't think it's, oh, well, SMH is just, all you're seeing there is AMD. I don't think that's the case. That might be a good thing to research at a certain point, but I don't have that info handy. But anyhow, it's working. We got this breakout above 262, and now we're about $9 higher. So at the midpoint of the channel, look for that to hold. If it doesn't, you may see a pullback into 269. But right now it looks good. The angle of attack is not, too dramatic. It's steep, but reasonable in my opinion. So let's see if we can hold this midpoint and make a drive higher up towards, let's just call it 273 would be the top of the channel. Chart setup for you. GM is testing its 200. So if you're a 200 buyer, or let me just put it this way. It's an important point on the chart. Why? Because you get a break below the 200 here. Notice the huge void in volume over price, how all this trading up here has built up this value area. When you see the large bars and a lot of trading, that's value. This is the high end of value, and then the 200 is the low end of value. You break below that, there's not going to be anybody home for quite a while. I mean, all the way back down into, the 44s and the 42s, where you could expect people to step in. So that might be an attractive short. It's nothing to front run, because the 200 is a place where a lot of people want to buy. So I wouldn't be surprised if you saw a bounce right here if we can get into the 52s, and the 200 is actually at 51.73. So you get a move in there. I wouldn't be surprised to see a little bit of a bounce, but it's certainly a place to watch on this chart. And what I'd like you to do is set yourself an alarm there. I want to offer up another bracket trade for you. And a bracket trade is nothing more than a second day play on either a gap up or a gap down, where you alarm the high side of the range, which in this case for PAYCOM was 445.39, and then the low of the day was 427.91, and the gap was down to 400. So on a gap fill to the downside, you've got $30 of potential travel. And then you've got a prior high up at, let's just call it 470. So you've got about $25, $30 of upside on a breakout. So what you do is alarm both sides, and then you let price tell you which way to go on that trade. And what I've done here is, last night there were a bunch of high profile bearish reactions on earnings. I'm not even going to get into if they beat or if they didn't, but I mean, Fastly was down 25%. Etsy got whacked. Some of these other ones got whacked. Roku is down. So, whether they beat earnings or didn't, for whatever reason, those are down pretty hard this morning. So if you're an active trader and you like those gaps on the same day, I would imagine those tickers would be fertile fields for you on an active trader basis. But if you're like me and prefer second day plays, then all these will be bracket trades that you can set up for tomorrow. I'm going to look again and, set up my alarms at the end of trading today for into next week. If these break lower or recover, they should be good trades, just because they're down so much. I mean, when I look for gaps, I mean, I don't look for, if you do a screener and look for those gaps, I'm not going to mark a 2% gap. I'm not saying that it's not money, but it's not like a big opportunity. And, so I like to see, 8%, 5%, 10%, 30%. Those are gaps that if they get filled can mean real money. So I try to, get bigger names that have nice liquid option chains that with sizable gaps, either higher or lower. See, this one was higher. That had a nice gap up, but it's got $30 of potential below and $30 of potential above. So, I mean, that can be a nice trade. So I try to discriminate a little bit on, which gaps to keep track of. And, when you got earnings season and you got, 50 or 100 names reporting every night, it can get overwhelming. So I think you've got to come up with a little criteria, or you're going to be tracking. You'll be overwhelmed. You'll be swamped. And even on stuff like this, just in one night, you're adding 7 names to track. So, it can get overwhelming quickly, and you've got to, figure out on your bandwidth, what can you really handle? What do you want to keep track of? Because if you get to the point where you're getting peppered with alarms, at a certain point, if you hear an alarm long enough and you ignore them all, then it doesn't mean anything. So pick out some names that you want to, if you're into Uber and Lyft, track those. If you're into, some high-tech stuff, you can track Roku and Fastly. So, and I do want to apologize about something. We had a long trade on CVS, and it reported earnings yesterday morning, and I had lost track of that. It did not do, it didn't crater, but it didn't go up either. So I apologize for not calling that to your attention. So I missed that. I had a long, I closed it after earnings. I think I had August 85 calls. So I closed that one out for a loss. But the real crime was missing the earnings, because I don't like to hold through earnings, and I missed that one. And so that was a failure on my part. So I apologize for that if I didn't call it to your attention and you missed it as well. So try to do better there. So let's wrap it up here. We've got the jobless claims at 8:30. Let's see if we can break out. Let's see if we can do something, or if we just have more chop to suffer through for a while before the market decides whether it wants to ramp higher or knock us down a notch or two. So this has been Chris Buss with Traders Profit Compass. Thank you so much for watching, and talk to you next time.